What's up, guys? Welcome back to another video. I am John and this is John Paul Investing. So today we have seen the markets take a sudden dip for the worst, as you know, some might say. I don't think it's that bad that the markets dipped. Yesterday I did see the futures green, and you know, anyone would assume the markets are going to be green today, but we did end up seeing a dip, and you know, pretty much all tech stocks are down today. On the other hand, we have companies like Tapestry, we have Nordstrom, I think Stitch Fix is up today too. Pretty much those companies revolving around like clothing, I would assume online retail in general is doing very well today. So, I mean, if we're just going to look at the NASDAQ has been pretty much up and up the past month. So I think we were due for a little bit of a correction or pullback to, you know, make this kind of movement sustainable for the long term. If you look on the 6 month, you know, it looks like we're trying to pull back all the way to around the 12,000 mark in the NASDAQ. Right now we're looking at 12,358, so I wouldn't be too surprised to see a little bit of red for, you know, maybe a couple more days before we see a really nice bull run happen. Hopefully we'll see something like that next week, but it's really hard to time the market, as I always say. Again, it does make sense for the market to pull back because this sets us up for, you know, newer all-time highs. Same goes for the Dow. We did dip below this previous low in September back in late October, and we have since then, you know, made new all-time highs. So I think that the market is just seeing a normal correction, normal pullback before we set ourselves up for another move higher. Now, as far as Nano Dimension goes, I know you guys have been asking about Nano Dimension in the comments. I was saying that as long as the market closes between, you know, $6 and $8, it is going to stay in this range. We would need to see a run, you know, past $8 and beyond, and then a pullback with a retest before, you know, we can confirm another move or another leg higher. Based on just price action, though, it has basically shown us that it wants to stay very much so in this range. And the reason I say, I mean, it might sound obvious, you know, it goes to $8 and then, okay, obviously if it's $8, it's going to be more than $8. And then if it's less than $6, it's going to be less than $6. Okay, I mean, I get it. The whole point I say that is because when we go to those prices and we close, the closing is like the convicting candle, right? So just imagine that when we close above $8, we are now setting a stage to, you know, make another leg up. So the markets are going to test stock price around these price points. So if it runs past 8, it's going to want to come back and test these levels again. If it falls and breaks back underneath $8 with a close and then stays there and fails to, you know, close back up above $8, there's a chance yet again that it'll stay within this range. And if something like this were to happen, for example, I would say that if we broke above $8 and let's say we don't touch 6 again for a while, if we were to break above 8 and then fall back underneath 8 again, I bet you we would see $6 again. But that's not a cause for concern, right? Because if we're long-term investors in a company, we of course want to, you know, find a good price to average in a position. And, you know, I would rather average in a position at $6 than, you know, I would at around, you know, $8 or $9. Will I still average in up there? Yeah, of course I would. But the point is, if you have the option to get it cheaper, why wouldn't you want it cheaper? So today really is just another day in the stock market. That's why I say it's very important to learn about the companies you're invested in, because sometimes the stock markets do not reflect what the underlying companies are doing. So very important that you do your research on all the companies you're invested in, especially if you're heavily invested in them or plan on holding their stocks for a long period of time. But anyways, guys, that is it for this video. Thank you guys for watching. If you liked what you're watching, go ahead and hit that like button. And while you're down there, go ahead and hit that big red subscribe button. And don't forget to hit that bell notification to get notified when I make videos just like this one. Thank you guys for watching, and I will see you in the next video.